Hello and welcome to The Pitch. I'm Hansley of Livewire Markets, and joining me today is Anthony Srom of Fidelity International. Our subject today is a part of the world containing more than half of the global population, and in the decade of 2023, it accounted for more than 70% of global GDP. I am, of course, talking about the Asia Pacific, and it's a part of the market that Anthony knows very well. But as you also know, Anthony, it's a huge region. So just to start with, how do you like to break up the opportunity set within Asia?
One thing that I'll look for is negative sentiment as a filter. So my process revolves around that as a source of idea generation. So what you're looking for across the region is very much where's the neglect, what's being sold off, why the market doesn't like it, and use that as a starting point for idea generation for the portfolio. That's simply how the process works in the first instance.
So with that in mind then, maybe give us a broad overview of where you are overweight and where you are underweight with that contrarian bent in mind.
So where the fund is overweight, where it's underweight, underweight Taiwan, underweight India, which are the two most popular countries as an investment thematic in Asia, Pac ex Japan at the moment. Where are you overweight? Hong Kong, China, not an area of the market that's getting a lot of interest in actual fact, negativity. When I've met clients the last 1 to 2 years, it's very much Asia in aggregate looks tough, and I just really don't want to deal with China right now. And so you've seen fund outflow from the region. But within the region, you've seen the extremes of gravitation towards Taiwan, fund underweight, India underweight, and where no one's really positioned that much, overweight.
Yeah, well, there was a while there where there was so much selling coming out of the Chinese stock market, you wondered if there was any more selling to go. I guess, would I be appropriate in characterizing that's probably when you were doing your most digging, your most research into China, or were you like everybody else staying away?
No, you're digging across the region at all times, but it's just how many ideas can you unearth?
Sure.
So valuation for me is an important part of the process. And you can't really tick that box for Taiwan or India at the individual stock level. China, you can a lot. However, then it becomes a bit more of a question of, are these stocks that are flagging up as cheap actually value traps? Yeah. So you have to dig, again, a bit deeper.
Yeah, no, absolutely. I'm interested that you said you were broadly underweight India, because I noticed in reading for this interview, your largest overweight position by stock, or your largest overweight, is HDFC Bank in India. So what makes it so special that it warrants being 11% of the fund, just that one stock, and as you say, being underweight India, having your largest overweight being an Indian bank?
Yeah, so if you look at what's happened to HDFC Bank the last few years, the valuation multiples have consistently derated for the best part of 5 years. So have a chat with our analyst, have a chat with our trading desk, kind of what's their assessment of what's gone on, does it reconcile with mine? What seems to have happened with HDFC Bank over the years is it's been used as a funding source for investments into public sector banks or other private sector banks. We've had a fintech boom there in the non-listed space, which funds can participate in. So again, another layer of funding has come out. Their competitors have cleaned up their balance sheets. So again, there's been some reallocation to some of their peers, ICICI Bank, for example. I think it's come to a juncture for HDFC Bank in the last 12 months where valuation multiples have reached such a level where you expect to get full carry through from the fundamentals they're delivering. So don't get me wrong, the last 3, 4, 5 years, they have been delivering on fundamentals, EPS growth, returns, net interest margins, etc. But you've had that headwind of valuation multiple derate, which I don't think is in place at the moment.
Let your winners run, yeah, absolutely.
That's right.
So that's the largest overweight position by stock. By sector, over 20% of the fund is in information technology. But again, this is where I think things get really interesting, folks. When you think of Asia and IT, you probably think of companies like Alibaba and Tencent, and your fund holds neither. Why?
Short answer, I think that sector and companies within that sector are value traps. If you look at what's happened in China, this is my assessment, monthly active users for these companies is by and large maxed out. Minutes per day per user is maxed out. These companies are fighting for market share, so handing out subsidies to try and attract users or keep their attention span longer on these apps. So that's the backdrop. As a result, market share is being fought for, margins are under pressure, you've got a soft macro backdrop, these stocks aren't ridiculously cheaply priced, we'll wait. That's basically the high level view of, let's call them the Chinese platform companies, so Alibaba, Tencent, Meituan, Kuaishou, JD.com and whoever else is there.
Yeah, those big five. Okay, so if you don't hold any of those major Asian tech plays, how do you gain access to those key themes like AI and digitization? Do you have any exposure to those themes, come to think of it?
So the fund does have exposure to AI or digitization themes. You've got to bear in mind the fund is very much individual stock selection.
Of course.
But from a top-down view, yes, will spit out some macro views. You're not looking for themes to invest in, you're looking for companies. But to answer your question, Samsung Electronics, TSMC are in the portfolio. So Samsung Electronics is a memory maker, DRAM, NAND. TSMC is Taiwan Semiconductor Manufacturing Company, which is a foundry, so logic processing chips. And there's a minor play in Taiwan called Jinding. So the fund has three different companies that would be related into that thematic that you're talking about.
Perfect. Anthony Srom, Fidelity National, thanks for joining us. And thank you for joining us for The Pitch. If you enjoyed that interview, you can subscribe to the Livewire Market Index websites, as well as our YouTube channel. Thank you for watching.